Hello and welcome friends to my channel Hone Your Trading Skills. In this video we will discuss about candlesticks. A candlestick is a basic of technical analysis. If we start comparing candlestick, then we can compare it with an alphabet of any language. When we start learning any language, first of all, we have to learn about its alphabet, the alphabets of that language, like A, B, C, D, right? So you can think that candlestick is alphabet to the technical analysis. Okay. So, but before we deep dive into the candlesticks, we will discuss some common terminologies that we might already knew, but we will discuss to understand candlestick more easily. So the first term is trade. What is trade? Well, trade can happen only when there are two parties are agreeing to exchange something in place of another thing. Whether it could be a barter system where I am exchanging one object with another object, or it could be my job that we do. We provide our services to our company or to an individual, and that individual or company gives me money against it. Or we can exchange our currencies. I can buy a US dollar or yen or any other currency in place of my INR, or I can purchase some goods in place of some money. So anything could be a trade when we are exchanging one object with another object, then it is called a trade. It's that simple. Okay. So, but when we go for the trade, we will agree to have the trade when we are assured that whatever we are exchanging in place of my object, it is worth for what we will get from another party. For example, if we are purchasing something and we understand that it is worth for buying that object or anything with XYZ amount of money, then definitely we will agree and we will buy. And if the price are too high than its actual worth, then simply we will deny the trade, right? So to happen the trade, the price matching is also very important, right? So what is a price? The price is an amount that we pay or receive in exchange of anything. And the same price can be very attractive to you, and at the next moment that same price may look very unattractive to you. This could happen. Now for this, let me take an example. Okay, for example, there is a boy who is saving his pocket money for a very long time to purchase a certain mobile. He goes to the store, and in mobile store he inquires about the mobile. The shopkeeper says, okay, I can give you this mobile in $300. in 300 bucks, I am ready to give you. The guy says, is there any offer or discount that you have? The shopkeeper goes and calculates something, and another time he comes back and says, okay, yes, I agree to give you 10% discount on the same mobile. Now, this guy, this boy, is really happy that he is saving 30 bucks on this trade. Ultimately, he has to pay $270 in place of $300. He is saving his $30. But at the same time, the shopkeeper is also very happy that he is also making some money by selling that same mobile. Ultimately, he also calculates within himself in his mind, and he finds that okay, this is my money. For example, he said he made $50 of profit in place of $80, but the shopkeeper is also earning some profit in place of it. Now the boy is very happy, and the price is very attractive to him, and he is very happy, and he is coming back to his home. And now on the way he finds another mobile shop, and that mobile shop has displayed there is a sale of 20% direct sale. You can get any mobile at 20% less price. Now the same worth of that mobile in that store he is able to purchase in only $240. Oh, what man? What that guy will think? He should have come first at that store. At the same time, the same price is really unattractive, right? Yeah. So this is the game of price, and in entire trading session, and every time this game of price comes in the picture, and every time when we will be buying our things when the prices are good, and we will not be buying the things when prices are too high. So ultimately the game of the trading is buy at low and sell at higher price. Okay, so some more examples related to the price in our daily life. So you go and on a weekend party you go to a store, and that store says that you can get your meal at $49 only. So this is a kind of strategy that a storekeeper keeps playing with its customers. In place of writing 50, as soon as you listen the word 50, you say, oh, it's too costly. Now he has reduced $1 and he is selling only at 49. Now you listen the word 40 and you say, oh, it is cheap. It is not going to give any impact on your pocket. Okay, so that is the game of price, and we have to make always aware about the price all the time. Okay, and now we come to the history of the candlestick. So he is the man Muniesha Homa in 18th century. He is the man who has developed the candlesticks, the history of candlestick. He is called to be the grandfather of candlestick. Okay, so what this guy did and how he invented the candlestick. Well, as we know that he is a rice trader, so what he was doing, what he used to do was he used to collect the prices of rice every day. And what prices he used to collect? He used to collect the market opening price at which the rice price was traded for the very first time in the day. He used to have the price, the highest price on the same day where the rice was traded, and the lowest price where the rice was traded, and the close price where rice was traded. So ultimately, in a single day, this man was having 4 prices for the same rice. Okay, for the same rice, he was having 4 prices every day. So he just noted down in his somewhere in his leisure, and it was very difficult, it was very hard for him to understand the figures, to analyze these figures. So what he did, he represented these 4 prices of a single day into a candlestick. So how he got the idea to create a candlestick? You can compare a candlestick as a candle. Of that candle, when take a candle and you separate that candle into the 2 pieces. One piece, remove the first part from the wax from the top, and remove some wax from the bottom. So in the middle you will get some wax, and on the top and at the bottom of the candle you will get some thread. So you can imagine a candlestick like that candle, which is having some wax in the middle and thread at the top and the thread at the bottom. Okay, we will now I am going to discuss this more. So friends, there are 2 types of candlesticks. One is bullish candle and one is bearish candle. So what he did is he selected those days from his ledgers on which the close price was higher than the open price, and he selected those rows on which the open price was higher but the close price was low. So he categorized the data into 2 parts. So one part on which the open price was lower than the close price, he called those candles as a bullish candles. And Mr. Homa said that when the open price was higher and the close price was low, so he called those candles as a bearish candle. So now you can imagine this symbol just like a traditional candle, on which you can consider this part has a wax and there is a threads are coming out of the candle from both of the sides. You can see this bullish candle, and the same as in bearish candle as well. You can see this particular thread is coming out and this is thread is coming out, and you can consider this is a wax. All right, so this particular part which you are seeing in green, and here you are seeing in red, this part is called the body of the candle. And the portion you are seeing as a thread, like this and like this, or in this bearish candle from below the close price till low price, and above the open price till high price. So these portions are called the shadow. So these prices are called the shadow of the candle, and this is called the body of the candle. This is the body and this is the shadow. This is the body and this is the shadow. This is body, this is shadow, this is body, and this is shadow. So now I hope you have understood the types of candles, and you have understood the bullish candle and the bearish candle. So once again, let me explain to you the candles on which the open price is low and the close price is higher. That candles are called the bullish candles. So you can see why these candles are called bullish candles, because bullish candles on which over here you can see the price was open here in this graph. You can see, yes, the price at which the market was open was here, and the price at which market got close is here. So the closing price is higher than the open price. It means the price has gone up, and once the price has gone up, so in technical terms we say this candle a bullish candle. And in here you can see the open price of the candle is higher than the close price. Ultimately the market was open here, but market got closed here. So in the entire day the market went down and closed below the open price. So that is why this candle is called a bearish candle, on which the prices has came down. Okay, now one more interesting thing, why we are saying the term bullish and the bearish, from where these terms came into the picture. This is the standard terminology that we talk every time. The market is bullish, market is bearish, it's a bullish market, bearish market. So the bull, when the bull hits someone from its head, it strikes from the bottom to top. That means it is a, so with the action, if you compare this candle with the action of the bull strike, then you can say from the bottom to top the market has gone up. And the bear, whenever bear attacks on someone, it attacks from top to bottom, means from up to down. So that the strike of bear paw is from upwards towards downwards. That is why it is called a bearish. So that is from where the bullish and the bearish terminology came into the picture. Now let us see the same thing, the same concept in the live market. Okay, so we are seeing this is the data of till 12th of August of Nifty 50 chart. This is Nifty 50 index of National Stock Exchange. It is a day candle. You can see the D is written over here. Don't worry, we will go everything in details step by step, but we will revise the thing that we had discussed in our last slide. Okay, so here also you can see two types of candles. One in the green one, another one in the red one. The green ones we already discussed. These candles are called the bullish candles. On these days, market has closed on upwards. Market closed upwards, market closed upwards, market went up, up. Okay, and on the days, the candles which are in red, on those days the market price has gone down, the market price has gone down, the market price has gone down. Okay, now you can see, let's take this particular candle. Okay, this candle. Okay, now you can see, so we have already discussed that this particular portion, which is into the green, solid green color, that called body of the candle. Okay, and this is called the threads. Okay, from here till here, from here till here is a shadow, and upwards from this point till this point, this is called the shadow of the body. So this candle is into the green, so the open price will always be at the low and the close price will always be above the open price. So this is our open price and this is our close price. Okay, now let's take a bearish candle, this candle. Okay, so you can see this red portion of the candle, this is called the body of the candle, and you can see the shadow from this point till this point, so this is called the shadow, and from this point till this point, this is also a shadow. Okay, and now you can see this is a bearish candle. So in bearish candle, the price always, the open price is always on upside and the close price is always on the bottom side, and this is the low price and till here is the highest price. So every candle, so now let's take another example. So this is also a unique example. Here you can see there is no shadow coming down, but you can see a small shadow on upwards. Okay, so means this is the open price, okay, and the lowest price as well in this candle. This is the close price and this is the highest price. Got my point? Okay, now let's see another example. Okay, this is also a classic example. You can see this is a green candle. Okay, and this is the open price, almost the, okay, this is the lowest price, this is the highest price, and this is the close price. You can see the open price and the close price is also at the same level. Oh wow, means at the point at which the market was open and the market got closed is the same. But although market has traveled, although from this point till this point, till this point to this point, and at the end it closed at the same point where it was open. Okay, so we will discuss what are the different types of candlestick patterns and the candlesticks, what are the bullish candlestick patterns and what are the bearish candlestick patterns. That is altogether a different subject, but whatever I am trying to say, I hope you have understood what I'm trying to say. If you have any questions, just write your questions on the comment box, and definitely I'm going to respond to your questions. Okay, till then, goodbye and thank you very much.